Welcome back to the MD Investor channel. I'm Wayne Abraham, your personal finance guide. The channel where we're talking about personal finance, setting goals, achieving goals, learning and taking action, increasing our financial IQ, helping our children do the same, passive income, and breaking the cycle of generational poverty. If there's people out there you think you can benefit from this information, definitely let them know about MD Investor. We're learning together, we're growing together, and we are breaking the cycle of generational poverty. On Instagram, it's MD Investor 1. On YouTube, it's MD Investor. Definitely don't forget to hit the subscription button, hit the notification bell. You'll be notified when new content comes out. New video today, guys. Today, I thought we would go through a 10K. We've done videos where we talk about financial terms we should know, and one of them was a 10Q, which was a quarterly statement given out by a public company, and the other one was a 10K, which is an annual report, annual statement given out by public company. We shouldn't be nervous, and I know we don't have a background in these things, but we're not stupid people. We can learn about these things. So here we are on, we picked a company, Starbucks. Here we are on the Starbucks website. Here you see FY19 annual report, basically mean fiscal year 2019 annual report. So we'll just double click that. And basically what he said, fiscal year basically means when the company's financial year begins. A lot of companies, January 1 to December 31st, but some companies are different. I think in Starbucks it's different. Here we are, Starbucks fiscal 2019 annual report. And this stuff is available, guys, because these are public companies. They're available for everybody. McDonald's, Apple, Google, whatever company you can think of, if they're a public company, they're available to the public. I mean, you can't go to your mom and pop store because they're not a public company and have to look into their books. They're a private corporation, but these are public corporations. Starbucks fiscal 2019 annual report. We're going to go through and just kind of, see what we can learn, okay? Here's a picture of a Starbucks visitor center at Hacienda Alsacia, Costa Rica. Nice picture. We're going to go down here and see what we can find. There should be okay, good. It's a nice page for us to see. United States Securities and Exchange Commission, SEC. Sometimes you're watching the news and you'll hear them say the Securities and Exchange Commission, or they'll say use the abbreviation SEC. This is the federal department of the federal government that's involved in overseeing and regulating securities commission. Public companies, stocks, bonds. These are the people that sometimes will charge people for insider trading, having knowledge from inside officials before it's public, and you can go to jail for that. So United States Securities and Exchange Commission, Washington, D.C., this is zip code, Form 10K. We talked about that, right? 10Q is the quarterly report they'll give out every quarter, 4 quarters in a year, and the 10K, the annual report. These are public information, guys. So, we don't have to spend all our time watching cat videos. We can use some time to try to learn and increase our IQ. So here we go. Annual report pursuant to Section 13 or 15D of the Securities Exchange Act of 1934. Basically, it means this is a law. They're doing it not because they feel good. They're doing it not because they want to. They're doing it because it is law. That's why they're doing it. The name of the company here, Starbucks Corporation, right? Washington is the state, because we know that Starbucks was started in Seattle, right? Seattle, Washington State. And this is the IRS employer ID number. The employer ID number, or what they call the EIN number, is basically the Social Security number for a business. You have your Social Security number. I have my Social Security number. And a business also have a Social Security number. They call it an EIN number, employer ID number. That's the number they use when they're filling out their forms, when they're filing taxes. They have an employer ID number. This is Starbucks employer ID number. This is the official address of the headquarters. Okay, the zip code, the phone number, all these stuff are mandated by law. Okay, I'm not sure what this is. The title of each class. I'm not sure what that is, but it's a ticker symbol. Okay, SBUX. That's a ticker symbol, and all publicly traded companies have a ticker symbol. That's how you look it up, or that's one way you can look it up. Name of each exchange on which it's registered. So Starbucks trades on the Nasdaq, right? You also that's a stock trading market. There's the New York Stock Exchange. Some companies trade on the New York Stock Exchange. Some trade on the London Stock Exchange. So far we've learned a lot of different. So far we've learned a lot of different things. Name, we've learned the official address, phone number, the EIN number, the ticker symbol, and the exchange which it trades. Okay, let's keep looking. And we also learned that the 10K is the annual form. Okay, it's an annual form. Starbucks Corporation Form 10K for fiscal year ended September 29th, 2019. See, so Starbucks fiscal year ends September 29th, 2019. A lot of companies fiscal year ends on December 31st, but so you know, Starbucks is different. So the next fiscal year will start probably September 30th. Okay, this is the index and tells us what we'll find in its annual report. Part 1, Part 2, and Part 3. Part 1 is a business. Let's hit that and see if that shows anything. General, like we know what Starbucks does, but let's just read and see what the official people say. Starbucks is the premier roaster, marketer, and retailer of specialty coffee in the world, operating in 81 markets. Formed in 1985, Starbucks Corporation common stock trades on the Nasdaq Global Select Market, Nasdaq, under the symbol SBUX. We purchase and roast high quality coffee that we sell, along with handcrafted coffee, tea, and other beverages, and a variety of high quality food items through company operated stores. We also sell a variety of coffee and tea products and license our trademarks through other channels such as licensed stores, as well as grocery and food service through our global coffee alliance with Nestle. In addition to our flagship Starbucks coffee brand, we sell goods and services under the following brand: Tivana, I think that's more tea. Seattle's Best Coffee, Evolution Fresh, Ethos, Starbucks Reserve, and Princey. I'll stop there, but you basically get the point, right? This is from the horse's mouth. Okay, let's go back here. A little snafu here. Okay, so basically, I'm going to go back to the index because the bottom line is we want to see the money, right? We want to see the numbers. So I'm going to go back here to the index. Here we are. So I just went there to basically show you that there's other stuff too. The business, risk factors, I guess Starbucks owns properties, I guess. We're not going to get involved in all that, okay? We want to see the stuff. Let's look at part 2. Part 2 is what we're going to focus on, especially item 6, selected financial data. Item 7, management discussion and analysis of the financial condition and results of operation. That's going to be important. Quantitative and qualitative disclosures about market risk. Maybe not so much important. And then item 8, financial statements and supplemental data. Sometimes stuff comes on after they publish, and they almost like an addendum. But let's go to item 6. Okay, financial information in millions, except per share data. Meaning the numbers, all the numbers we're going to see, they're in millions, except for the data that pertains to per share capital. Okay, as of the end of the fiscal year. Okay, we said the fiscal year ended September 29th, 2019. Net revenues. We did a video where we talked about top line. You'll see companies will use words such as revenue. They may use words such as top line, and they may use words such as income. Okay, you may see those terms. So you may see sales. Correction. You may see sales. You may see revenue, or you may see top line. So when we're talking about top line growth, they're talking about revenue or sales. All right. So net revenue. company operated stores and licensed stores and other. So under revenue, immediately we see that Starbucks gets revenue from three different categories. One is company operated stores. There are some stores that are owned by the corporation. There are some stores that are licensed or maybe franchisees, and there's other category what they call other. So under company operated stores, the revenue for 2019 is 21 billion 544 million, or 21.5 billion dollars. Okay, because it's in millions. So 21,000 million is 21 billion. So 21 billion dollars in company operated stores revenues. Is that good? Is that not good? The way we find that out is you compare it to the previous year or previous times. So we see here a year ago, in September 30th, 2018, that same revenue from company operated stores with only 19.6 billion. I say only 19.6 billion, and if that's nothing. But you basically see that there's about a $2 billion increase. Increase is good. Increase in good is good. When you want to think about investing in a company, you want to see where the numbers going. Are they going up? Are they flat? Are they going up? And even if you trend it over to 2015, it's been going up 15, 16.8, 17.5, 19.5, 21.5 billion. Company operated stores revenues are going up. Then we look here to the licensed stores. Maybe these are stores leased that maybe to franchisees. $2.8 billion. Okay, net revenue. And again, we compare it. You see the trend is going up. Other, I don't know what the other category is, but it could be supermarket. You go to the supermarket and you see them. They'll have Starbucks coffee for sale, or you'll see sometimes you go somewhere and there'll be like a vending machine, and they'll have Starbucks products available. So that could be the other. But the bottom line is total net revenues for fiscal year ended September 29th, 2019 is $26.5 billion. Okay, you compare it to the previous years, and you see that there's a definitely trend upwards. Okay, operating income, which is $4 billion, and operating income is basically what it takes to run the company. You got to pay employees, their wages, maybe their health insurance, maybe they have to keep the lights on, electricity. That's the cost of doing business. Okay, operating income, and we see the trend is slightly going up, and we know that pretty much things going up, right? Okay, let's see what else here we can learn here. Let's look here at EPS. We did a video about financial terms. You should know one of them was earnings per share. Earnings per share, which basically means the amount of money that each share is earning. Okay, earnings per share. With the earnings per share is $2.92, and we go back to the trend. I mean that's the number you want to see going up. Earnings per share. That means the company is getting more profitable. There's more income generating for you, the shareholder. And we see that a year ago, last year, the earnings per share was actually higher, $3.24. So it actually, the earnings per share compared to the last year went down a little. That's something we have to look into. Before that, all the earnings per share were going up. $1.82, $1.90, $1.97. Then it went up, grabbed a very large increase to $3.24. So definitely something happened here. Something positive happened here because the earnings per share increased over $1. So maybe there was some acquisition. Maybe they acquired some new companies. But then something went here where it went down. So we'll try looking at it. And we see here where they have footnote 2 is probably something that they can help us with. Footnote 2. Just remember that. Cash dividends declared per year. That's what we coming on. We're talking about we want to be dividend investors. The companies pay a dividend from the profit they make. Cash dividends per share. We go back. Well, they paid $1.49 per share, and of course, it's going to be divided by 4 because they pay the dividends 4 times a year. And you go back and you see the dividends have been steadily going up. 68 cents, 85 cents, $1.05, $1.32. They're growing their dividends very aggressively. Okay. net cash provided by operating activities, $5 billion. We see that, so net cash provided by operating activities. We see that it's gradually been going up since 2015, and it went up to about 12 billion, but then it kind of went down almost like a half. So that's something else we have to look into and see why the net cash provided by operating activities going down. So footnote 2 and 3 is going to be important, and all the stuff is going to be provided. So here again, footnote 1, 2, 3, public information, guys. We just have to look. So let's quickly look at footnote 2, where we said that the net earnings, where the earnings per share was going down, right? From $3.24 last year to $2.92. There's a footnote 2. Let's see why it went down. It says here under footnote 2, fiscal 2018 results include a gain not subject to income tax of $1.4 billion, resulting from the acquisition of our East China venture. So they must have acquired some company, what they call East China venture. The impact of the gain to our diluted earnings per share was 99 cents. So they're explaining that I guess the acquisition of this company, this East China venture, somehow affected their earnings per share by about 99 cents. That's what they're attributing that to. Not sure of all the details, but the bottom line is, if you want more information, you can dig deeper. But the bottom line is, the information is out there. Let's look at our footnote number 3, where we said that the net cash provided by operating expenses was $5 billion, and previously it was $11.9 billion. And we're like, what happened? It says net cash provided by operating activities for fiscal 2015 through fiscal 2017 has been adjusted for the adoption of new accounting guidance related to excess tax benefits, as discussed in Note 1, Summary of Significant Accounting Policies. So this may have something to do with, I'm not 100% sure, but it may have something to do with maybe the Tax Cut and Jobs Act that Trump passed. I'm not 100% sure, but it may have something to do with that. But the bottom line is, they're addressing when there's something faulty or there's a negative impact, they're trying to address it, okay? All right, so let's go and look here at the balance sheet here. Let's look at the balance sheet here, where they're saying total assets, $19 billion. And you compare that to previous years, and assets gradually been going up and up and up. And it was last year, assets was larger. It could have been something that they sold off. Long-term debt, you see their debt going back a couple of years has been going up. And these are companies, they're like us. They take loans out, okay, at low interest rate. They take loans out if the interest rate is not that high to what? To grow their business. They do that. As long as the debt is not too much. It's like an investor who take out debt in the form of a mortgage to buy more rental property. Not all debt is bad. Okay, so let's. We're not gonna, like I said, there's a lot of information here. We're not going to go through everything, guys. This kind of whet our appetite a little. Now you see that they break down their business into several segments. Okay, so you have the Americas, which is probably North America, South America, right? Because they have Starbucks everywhere, right? Basically, the sales growth is up 5%, and if you look over the previous years, it's gradually been going up. Change in transactions, 2%, which means I'm not sure exactly what that means, but I know the change in ticket is 3% increase in the price of people buying stuff. Okay, so instead of people paying the average of $3, maybe now they're leaving and paying like $4 or whatever. But so these people quantify everything, and there's one thing you will take away from this video: these companies, they quantify everything. They're tight. They're on their number. They're on their game. They know their margin. They know everything. We have to be like that in our own home. You got to know, what does it cost? What am I making? What am I paying for gas and rent and food? How much did I spend last year on a credit card? They know their numbers, okay? They run their business like a business, and we need to run our home like a business. International category, again, 3% sales growth, a 2% increase in the charge of the in change of the ticket, meaning people are spending a little more money. It could be that maybe Starbucks is raising their prices, maybe, and then consolidated. Okay, so let's see what else we got here. Store count. They're telling you that in the Americas, the store count now is about 284, um, increased from 275. Okay, these are company operated stores. Licensed stores in this year, 323, and last year was higher, 624. What happened? Maybe I mean, I don't. Either Starbucks closed some stores that were performing poorly, or um, maybe some of those stores became company operated stores. I'm not sure. Okay. Okay. Let's see here what we got here. Management discussion and analysis of financial condition and results of operation. That's what you want to do. What does management think of all these numbers, right? These are the numbers, right? 26 billion, 12 billion, 7% increase year over year. What do they feel? How do they think? And this is what this section here, management discussion. Okay, let's see here. It says here, Starbucks results for fiscal 2019 reflect the impacts of continuous streamlining efforts, meaning they're trying to cut costs, initiated during the fourth quarter of fiscal 2017. So they started this stuff 2 years ago to focus on accelerating growth in high returning businesses, meaning the businesses that are really growing and making a lot of money, having greater margin. They want to grow those businesses, maybe in China, because they're all talking about China, and converting several market operations, including Thailand, France, and the Netherlands, to fully licensed models in fiscal 2019. Additionally, in fiscal 2019, we saw the full impact from the licensing of the majority of our CPG and food service business to Nestle in the fourth quarter of fiscal 2018. Okay, so they're saying that we're not surprised. We've been looking at this. We've been looking to conserve costs. We've been looking to grow our most profitable business since 2017. So none of these stuff happened by accident, guys. These guys are focused. Look at in the last sentence here, where it says, in December 2017, the U.S. government enacted comprehensive tax legislation into law. H.R. 1, commonly referred to as the Tax Cuts and Jobs Act, the Tax Act, which is what Trump passed, which significantly changed existing U.S. tax law and included numerous provisions that affect our business. Our U.S. corporate income tax rate for fiscal 2019 and future years is 21%, while a blended rate of 24.5% was applied in fiscal 2018. Basically, the tax cut helped them. It lowered their tax rate from about 24.5 to about 21%. Okay? More money in their pocket. They can grow the business. They can pass money on to the investors. Financial highlights. Total net revenues increased 7% to $26.5 billion in 2019 compared to $24.7 billion in 2018. We saw that, right? It's a 7% increase, okay? Consolidated operating income increased to $4.1 billion in fiscal 2019 compared to operating income of $3.9 billion in 2018. We saw that, how the cost of doing business went up, and they were probably going to explain. Fiscal 2019 operating margin was 15.4% compared to 15.7%. Operating margin is basically the profit they're making, right? They're the cost to provide the goods, right? And that's to run the business, that's to be in business, and then the profit they make. That difference is the operating margin. So fiscal 2019 operating margin was 15.4% compared to 15.7% in fiscal 2018. So the margin got squeezed a little, right? From 15.7 to 15.4. Now they're going to kind of talk about that. Why did the margin get squeezed? Operating margin compression in fiscal 2019 was primarily driven by partner, meaning employee investments, and growth in wages and benefits. If you know anything about Starbucks, you know they started in Seattle, Washington, which is a very kind of progressive liberal city, and one on the forefront of increasing the wages for fast food workers, essentially. So they increased the wages of the workers there, and probably the benefits, and that part that kind of cut into their margin a little. In addition to licensing our CPG and food services and our food service businesses to Nestle and other strategic investment. So they're explaining why our margin got squeezed a little. These decreases were partially offset. Listen to this, guys. These decreases, meaning in our margin, were decreased. These decreases were partially offset. How are you going to make up for that, Starbucks? By sales leverage. Fancy term for we're going to raise our prices. Sales leverage, we're going to raise our prices. Cost saving initiative, right? Do whatever they can to save money. Lowering restructuring and impairment costs and the impact of the adoption of new revenue recognition guidance on stored value card breakage. The take home message from that is that because we increased benefits to employees, we made it up by one of the ways we made it up was to increase the price of our goods. Remember, we said that the earnings per share was $2.92, and it was $3.24 the year before. And we said they're definitely going to have to talk about this. Earnings per share, or EPS, for fiscal 2019 decreased to $2.92 compared to earnings per share of $3.24 in fiscal 2018. The decrease was primarily driven by lapping the prior year's gains from the acquisition of our East China joint venture and the sale of our Tayzo brand. So they had a brand called Tayzo brand, which I guess they sold, and the cost of selling it kind of cost them some of the earnings per share. Partially offset by the gain from the sale of our Thailand retail operation during fiscal 2019. See that, guys? So they explain stuff. Okay, capital expenditures, meaning the money they put into like kind of increase the business, were $1.8 billion in fiscal 2019 compared to $2 billion last year. This is a sentence that you guys should like. We returned $12 billion to our shareholders in fiscal 2019. How did they do it? Through share repurchases. What do you mean? Well, when the company buy back, they call it a buyback. When the company buy back its own shares, that's a benefit to you, the shareholder, right? Because if you have 20 billion shares out there and the company buys back 5 billion shares, now there's only 15 billion shares out there. There's less shares out there. The cost of the company or the capitalization of the company or the value of the company is the same, but now it's going to be divided by less shares. That means each share price is worth more. It goes up. You, as a shareholder, when the price of the share goes up, it's good to you. It's beneficial to you, right? Because if you sell, you want to buy low and sell high. So if your share price is going up, that's a benefit to you. The other way that they return cash to shareholders was by the dividends. Okay, so we returned $12 billion to our shareholders in fiscal 2019 through share repurchases and dividends, compared to $8.9 billion in fiscal 2018. Okay, so $12 billion in share buybacks and dividends compared to only $8.9 billion the year before. Okay, so guys, I think that's a good place to stop. Like I said, a lot of information out there in these 10Ks, but the highlights are the stuff you want to look at is revenue. Are they flat? Are they going down? Or are they going up? We saw that Starbucks revenues are going up year over year. Revenues going down, something to be concerned about. Okay, obviously, certain businesses have certain business cycles. Like for example, a company that sells winter coats or whatever. Maybe their business goes up in the winter and in the summer it kind of goes. So they take that into consideration. Certain business cycles. That's why it's good to compare year over year. Quarter over quarter, maybe not as important, the 10Qs, but the 10Ks, year over year, you can kind of see it goes. So you want to look at the revenue, definitely. You want to look at the debt, right? You look at debt. Debt, like the debt. Not all debt is bad. As long as the debt is not too high, um, that's reasonable. Because like I said, these companies get great interest rates in terms of money. So money's cheap. They borrow it to grow their business. You want to look at EPS, earnings per share. Okay? You want to look at, is the earnings per share going up? You want to see that going up. You want to see dividend or the dividend going up. And what we didn't look at here, the dividend payout ratio. Dividend payout ratio, we talk about it in financial terms, you should know, is basically you take the dividend payout over the earnings per share. And you get a ratio. Okay? You don't want them to pay out 100% of their earnings in dividend. Why? Because there's nothing left over for the company to grow, all right, and to do research and development, or to buy other companies and grow bigger, acquire. Okay. For example, say another company comes on the scene and they're kind of trying to disrupt Starbucks. Since Starbucks is so big, they can just buy them. Well, it's gonna be hard to buy them if you have no cash on hand. So a dividend payout ratio, 50% is good. So the company's making $1 per share and they're paying out 50% or 50 cents in dividend. That means they have 50% left to grow the business. Okay. You don't want a dividend payout ratio too high. Okay. We see that the earnings per share here was $2.92 per share. And we know that Starbucks is paying out 41 cents a quarter. So you take 41 cents times 4. Let me do that right now. Let me do it right now real quick. 41 cents times 4 is $1.64. And we say they're making $2.92 per share. So $1.64 divided by $2.92 gives you a payout ratio of 56.16%. So less than 60% payout ratio. That's great. So that means Starbucks have over 40%. They're keeping more than about 43% of the earnings per share in the company. To what? To grow, to innovate, research and development. So guys, I know this video was a little long, but I just want to kind of give you a flavor, taste. And this is what it would take, guys, if you want to invest in individual companies. The last video we talked about is a dividend ETF, where you buy one share and it's get a basket of all these companies. This one would be you buying one company at a time. You have to do this for this company, and then the next company you have to do that. And obviously, if you see something concerning, you might want to hold off and not pull the trigger. So, guys, MD Investor in the house. We talk about breaking the cycle of generational poverty. We talk about increasing our financial IQ. Mama ain't going to teach you this. Your brother ain't going to teach you this. Your neighbor ain't going to teach you this. The church ain't going to teach you this. Nobody's going to teach you this. You have to teach this to yourself. Get motivated. Get educated. Take action. Okay? MD Investor. Definitely subscribe. Hit the notification bell. You'll notified when new content comes out. And on Instagram, it's MD Investor 1. Command your money to grow. Command your money to grow. Learn and take action, and I will see you on the next one.